Good afternoon, everyone. This is Henry, and in tonight's review, I wanted to start off just kind of going over a few things on the dashboard here, mostly reviewing the S&Ps, and a spot where I try to show you where the put-call ratio can be helpful. And anytime you have extreme readings, I think this is where, at least from a day trading perspective, can be very helpful. Noting that a lot of times the signals will be a little bit noisy. But when you see readings below 0.6, it just shows you that the market is a little bit too bullish, maybe a little bit complacent. And when you saw that, very extreme put call reading this morning on the gap up, I just think it really helped create the situation for the eventual short. Now, granted, it did run, a couple of points here for the cash, but ultimately, flushing down into a very critical strike that is SPY 520. Right? If you're just focused on the cash and you were thinking, all right, 5,200, you got to get back down there below it today. Well, it didn't really get, again, 10, 12 points, but that's a pretty good distance if you're day trading it, right? But then when you look at the SPY, you see that this is where they accomplished it, right? The low of the session here, 1959, so getting it some 40 cents below that strike. And I think that's showing us that that's the important strike for next week. So you've got monthly expiration, where right now the vol contraction regime has been the thing. So if that can continue to hold 520, VIX can continue to contract, there are ways we could see sideways to up into next week. Then after all of those options for that Friday expire, that's when you could see a bigger directional break. But I wanted to take that analysis into next week. So after getting that there for the S&Ps, the other thing I wanted you to see are two of my favorite picks. And there are no discounts, to be very plain. When traders could look at this and say, well, you're talking about buying something that's kind of right up here against these old highs. And of course, there's always a good deal of uncertainty with earnings too, which is why options can be so handy to really define that risk a lot better than you can do through the shares. But, again, just not really discounted at current prices, but look at that 2-day squeeze. I just think this is a pattern that if you can get above 215, you may have a little bit of room to run. So I wanted to bring it to your attention. And then the other is Amazon. So they're quite similar in the fact that as you're sitting right up here against, yesterday was a new lifetime high. So you'd prefer to buy it down around 183 if you could. But any dips down into that area, that's what I'm going to be trying to do. Again, you've got your squeeze. It's got a pretty bullish formation. You've got the DMI that is starting to see the positive shift and flare out above the minus, which can help bullish squeezes. And I think these are names that you want to keep on your board as we get into the weeks and months ahead. So I hope you find the review and thought process helpful. Y'all have a great weekend, and let's pick all this up again on Monday. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.